So before we really get into the portfolio analysis or looking at portfolio highlights, uh, I want to wish everybody a very happy New Year, a very happy 2022, and I wish all of you a very safe New Year. All of you are healthy and wealthy. Uh, Obviously, the start of the year, after a brief period of correction in the month of December, we saw the markets bounce back, reclaiming its previous highs, both for the Nifty as well as the Sensex. But within a few days into the current month of January, we saw that market started to correct once again. From the top of 60,500, we've seen a fall of about 5.5, thereabouts 5.5%. Currently, we are at about 58,000 levels on the Sensex and about 17,000 levels on the Nifty. We all have had a terrific journey in the later half of the calendar year 2020. 2021 was again one of the best years for the Indian markets. We were the actually the second best performing market after US, and we feel that despite whatever the current situation is, uh, the year of 2022 also should be will be positive for India and in the Indian markets, and we should be amongst the top performing asset classes for the current year as well. We'll discuss why we feel so, but certainly all of the concerns which have been doing the rounds for the last couple of months, whether it was about the interest rates going up in the US and then globally, inflation moving upwards, whether it was the tapering of in the US markets, whether it was contraction of balance sheet in the US. So a lot of things happening at the macro level in US, which was being pushed backwards in the last year. I think that all is now coming to be a reality. In the next month or two, you would see proactive action by the Fed on the monetary as well as the fiscal side in US. Typically, the global markets will tend to follow the same trend because most developed markets and markets like India are also experiencing similar situation. Not as bad in India. Our inflation is still, the CPI is still is moderate at 5% level, but one would expect a couple of rate hikes in India as well. The other development which happened in this month is the geopolitical issues around Ukraine and Russia at loggerheads, and with NATO making noises against Russia, and then obviously the whole Middle East market getting impacted, which is leading to the rise of the oil prices. So these are some of the concerns in the markets, and which has made the markets a lot more volatile. And I feel that this is likely to continue through this year. It may not be a very easy journey in the markets, while end to end we may be plus, or we may have positive returns. How much positive, time will say, but it will have, or it will come with its own volatility. But on the other hand, more specific to India, we feel that one thing which is very, very strong in favor of India is the recovery of the corporate earning cycle. Indian companies are now making more money, more profits than what they have been making on the average for the last 10 years. And the earnings recovery is not restricted to just a few sectors, a few companies, but the recovery of earnings has been more broad based. And a lot of sectors which were absent through the last 10 years, whether it was in the infrastructure side, whether it was on the metals commodity side, whether on the telecom side, subdued earnings on the pharma side, all of these pockets of, or pools of profit which had actually moved into losses is now returning. So recovery of earnings cycle, and then they say that eventually stock prices are slaves of earnings. So if the earnings continue to be as strong as they have been in the last couple of quarters, we do hope that Indian markets will continue to gain traction from both domestic as well as institutional investors, because eventually markets will give valuation to the earnings, and earnings will be one of the main drivers for Indian markets to remain more steady, relatively less volatile, and eventually giving you a positive return.